Hello everyone and welcome to another Elliott Wave Forecast weekly video day. First, I hope that everyone is having a nice weekend. And second, we're gonna go over the next 15-20 minutes to explain this market. A market which is in the shorter cycle is a very tough one, and in which it looks like it's gonna be a lot of checkout in the short time frames. I was telling some members yesterday that the toughest market is when you got a 4-hour trend in one direction, and then you have a 1-hour trend that is doing either a new trend or it is doing a connector. That's where we stand right now. That's the market that we see overdoing around 100 and something charge over the weekend. So let's try to give you, the best idea of what we receive or the weekly or day in the next 10 to 15, 20 minutes. And we're going to go even more deeper tomorrow at the seminar. Right here, we're going to start. This is the S&P 500. I want to say that we're still bullish the S&P, that the math hasn't changed at all, that the S&P is bullish. Now, the S&P is holding a still discount that you guys see here, which we are ABCWS ABCY. The S&P bounced very strong from the 618 of the proposal A weight. In other words, the next extension of the 1370 target that we have. Now, the bounce hasn't damaged yet any time frame, neither the 1 hour or neither the 4. So because of that, we're still bearish on the S&P 1 hour and 4 hour still. Now the S&P is not an issue. The S&P, like I say, is holding the BIOS. That's the count. Now the S&P also, I want to show you this. This count is like the out cover on the weekly, on one of the box. This count can be possible. If you take a look at the RSI of the S&P, it bounced to the pit for the cycle trend line right there. So we need to see how far the bounce can take the S&P. As of right now, you gotta be bullish with the other count, but the S&P is not the issue, to be honest with you. This is the Dow Jones, and I believe that the Dow Jones is not in this count anymore, and I believe that the Dow Jones is in this count, to be honest with you guys, unless we are getting a force break. I believe that the Dow Jones, no discount, that the Dow Jones is in discount, which is gonna take the Dow Jones deeper than the most bullish of the two counts. That's our belief. So the Dow Jones, if the Dow Jones is gonna go that deep right here, that means that the S&P 500 is gonna get into this scenario. We don't have confirmation yet that this is gonna be the case, but I want you guys to understand that we change the BIOS in the Dow Jones and we open an extension in the Dow Jones, and then that if one of them is gonna be the case, most likely the other is gonna follow. So as a general advice, we say to you guys that you gotta keep selling. You gotta keep selling the Dow Jones, and you gotta keep selling the S&P in every bounce until it proves otherwise. Like I say, we believe and we have mathematical confirmation that the Dow Jones is gonna open an extension, that is gonna take it in a regular flat, is gonna take it to 1180, I'm sorry, which that's gonna place the S&P in discount to around 1280, 1278, 1247. But we don't have confirmation yet in the S&P, and maybe one of the two is cheating. We need to know which one of the two is the cheater. Now, talking about the indices, also we want to take a look at another indices, no core Dow Jones on the S&P. The DAX, this case, this is the UK fixed, is getting close to our target, and we want to see how it looks like in these areas. We want to see how the index looks in that area, and we want to see how it reacts for those areas. There's gonna be a bounce there, I guarantee you, but we need to see how it reacts, because the only index, to be honest with you guys, that is not supporting our view, which is the more aggressive in favor of risk, is the Dow Jones. The rest, they are okay. So we cannot switch yet until, because doesn't mean that because the Dow Jones is gonna make the flat, that the UK and that the DAX and the IBEX, they're also gonna do the same. That doesn't mean that. So let's see how it's gonna play out at the beginning of the week. But we see more risk off. We need to see how the bounce it takes place in the S&P, how the bounce it takes place in the Dow Jones before we commit to one side of the market. As of right now, I gotta tell you that the trade in every single index is selling the bounce. You gotta sell the bounce in all those indices before you commit to the bullseye. There is no reason to buy risk yet, to be honest with you guys. Now that's the UK, the DAX, about the same, getting close to our targets. Look, getting close to our targets, and we gotta wait for the market to get to our targets. I mean, and I want to mention also, it's not only getting to the targets, it's how we get to the target. And as of right now, I repeat, I don't see nothing in the market that deny the idea that discounts they're gonna take place. For example, the DAX, it has a target of 66.89. Let's see how it gets there. Like I say, only the Dow Jones, it has extended past our mathematical target. And I repeat, in the case of the Dow Jones, I mean, the Elliott Wave count, it has not been invalidated. This count, it is valid. Look, now it hasn't even reached the 76.4. So I mean, the math is not perfect, it's almost perfect, and we can be wrong. So as of right now, you gotta keep selling the bounce until we change the 1 hour trend. You gotta keep selling the bounce in every index, guys. All right, now let's move on to the US dollar. This is the dollar. I want you guys to take a look now at the dollar. It's a very unique situation that we're taking in the dollar, and the reason why is because the dollar has been very strong against the dollar yen, and also very strong against cable, which both of them has been part of the dollar index. Also, the dollar has been very strong against the SIG, also, and the Norwegians, which are also, I mean, not the Norwegian, but the SIG, they are all part of the US dollar index. So the weakness that we see some sort in the dollar is based in the euro and based in the Swiss, and that makes the dollar, the Swiss, and the euro to take a different path and complicate also things. Also, the dollar has been very strong against the dollar CAD. Now, I want to take here and I want to present to you guys the US dollar in 1 hour. Look at the US dollar in 1 hour. Technically, it's a perfect diagonal. ABC1, ABC2, ABC3, the 4, ABC5. That's perfect. I mean, that's a perfect diagonal. If you take a look at the other side, it is also perfect. Look, it's a perfect structure right there. A perfect structure. You got ABC, divergency on the 1, ABC, divergency on the 3, and now we should get ABC. Now, the way I look at it is very simple. If I put the euro, let me take the other side. If I put the euro here, let me put the euro, and forget about the Swiss. Let's use the euro dollar, because I want you guys to look at this. Let's put the euro, let's put in red right here. Now, what is the difference? If we contract the right here, the chart, we can see how the diagonal was broken in the euro. So that told me that right here a cycle ended in the euro. That level right here is, of course, right here. But the dollar hold the diagonal. The euro did not. So right here we have two paths. The first one is that the dollar is going to do this, and it's going to do a diagonal, right? And then the euro, then it did, I'm going to put in general label, disregard the degree, that's your 8, that's your B. And then the euro now already did 1, 2, and the euro then is gonna do five swings starting on Sunday to the downside. That's one scenario. The second scenario is that the euro is going to stand to the 129 area. That makes the dollar from here to do a flat. When it did 8, a B, and the dollar is going to rally in a wonderful flat to the downside. Now, that the euro can be done here, I doubt it. And I don't think it is. It hasn't reached the target, and we have a reason why, which I'm going to explain now. That the dollar can do a flat, I like it. So, a conclusion is that I don't believe that the dollar strength, it is in place or it is over, and I prefer the flat, and I give you guys the reason why. I prefer the flat in the dollar and the 129 in the euro. Both can happen, but like always, there is a third pair, which is the euro yen. Now, what happened with the euro yen? If we put the euro yen correlated to these pairs, we can see how, saying here, the euro yen is about to end 5 weeks from this cycle. So it needs a little more strength in the euro. That's gonna be this lead. It needs a little more weakness in the dollar. That's gonna be this lead and this lead in the dollar. After these 5 weeks in the euro yen, what should happen? We should get a 3 weeks decline in the case of the euro yen, which is euro index, which can be translated as the last rally looking for 125, 126 in the euro dollar, and can be the last rally looking from 81.80, 81.93 in the dollar. Honestly, that's our preferred. I mean, I don't think that the market is done for the risk off. I think honestly that most likely the yen pairs can be leading, and I believe that the euro yen right there can be showing the idea that the dollar can be doing a flat, and the euro do not need to do a flat technically, because I don't think it is. I think that the euro is going to do a double zigzag from here to around 129, and that the euro is going to drop, because the most bullish scenario in the case of the dollar, which is that we're going to do a B and the C, and that the euro dollar is going to do this here, which is, that's the most bullish scenario. In some degrees, the euro yen, it come out that scenario, because the euro yen, it needs to correct and almost 200 picks rally sometimes next week, and that's gonna make that some bigger decline in the case of the euro dollar. So my best guess is that we're gonna see some sort of euro strength at the beginning of the week, and then we should see a set off in the euro sometimes by Tuesday or Wednesday. And that's going to be also the idea for the dollar, that the dollar is going to soar at the beginning of the week, and then that the dollar also is going to rally by Tuesday or Wednesday. All right? So overall, that's the view that we have on the dollar. Also, we're going to talk right here about Cooper. I believe that Cooper is still within the same cycle from here, and it hasn't reached the 76.4, but the cycle is still in place. And I believe that Cooper, I mean, it hasn't reset yet the RSI, as you guys see it here, which makes me to believe that either the cycle ended here and we're gonna do a double trip, or Cooper is in the big flat from here, from this high 3, 3, and 5, like the S&P can be and like the Dow Jones can be before the rally continue. So overall, we believe that we're gonna see some sort of risk off this week. Also, the risk off should not be done. Now, right here, another one, the EBEX. what do we see in the EBEX? We need another leg down in the EBEX. Now, the EBEX can do like we calling here, or the EBEX can do the diagonal, or the EBEX even can do another three-way rally here and then rally in 3 weeks back to the downside before going higher. I don't think that the correction in the EBEX is done yet. If we take a look at the 4 hour of the EBEX, we can see that the EBEX has not reached his 50% back yet of the daily bullish scenario. That comes at 773, which makes me to believe that we're gonna be trading lower still on the EBEX. Alright, so technically guys, we see more risk off during the next week, and you guys need to see the overall picture. Listen to Daoud when he does the overviews, and understand that we believe that some instruments has reached the corrected target from the middle of this year, some hasn't, but we don't see the market yet ready to be a buy. In other words, we don't see risk as a buy yet. We see and we believe that everything that is happening over there in some instruments like the dollar, not the dollar, like the euro, and like like the euro and like the Swiss and even EBEX with this bounce, we see that as a dance. The cat has been dancing a lot over the last week, but I believe that still we're gonna see more risk off. And as always, we recommend to you guys not to buy risk. Alright? I hope that everyone understands the overall picture. That's what the weekly videos is. And we're gonna come with more and more detail about pairs tomorrow at the seminar.